right now? Is it time to sell stocks right now? Are they about to crash? Because tariffs are here. And pay attention to this pattern because it's called a head and shoulders pattern. Have a look. Head, shoulder, shoulder. Is it time to crash? Because CoreWeave is pretty extended. And it just made a $9 billion transaction. This could be a reason for it to go lower. But some stocks on the flip side can't stop going up. Wolfspeed up here to 250% on the week. That's a big move. Looking here to fear and greed, it really depends what stocks you have. The greed is extreme, the fear is extreme, and this is where Wall Street is divided as well. Goldman Sachs says we're going to hike our target to what? 6,900. Whoa, that's a pretty high target there, Mr. Goldman Sachs. Second hike since May. Yes. And then Stifel says stock market crashes here. We're going to decline by 12%. I'm going to walk you through both scenarios. And what it really comes down to is whether the market can get knocked down, and then come back up. Is the US still exceptional? And what does that really mean? That's a pretty important question, isn't it? Yes, it is. So what this really comes down to is fundamentally, is it time to buy the hype and sell the news, which is what we talked about happening into July 9th. For the first time in about a week and a half, almost 2 weeks, we actually have a little bit of bearish evidence. We had 1 times lower low yesterday and we closed below. We don't yet have that confirmation. What would that confirmation look like? It's pretty simple. We'll pop over to SPY for 1 minute here. And this is CoreWeave. So that's a classic head and shoulders pattern. And what I'm trying to do is to show you the textbook chart or the pattern a little bit more, because I think it might be a little bit easier for medium or beginners or advanced people to understand what we're seeing here. This is a flag. Like when you go golfing, what do you see? You see a big old flag. That's why they call it a flag. So there's the flag. What are we doing? Well, are we playing golf? Are we playing football or soccer? It doesn't really matter. What matters here is the higher low. So if we look to our note, what we require by definition, if we go here to our best practices, all these links are in the description if you want to find out more. If we're going from being bullish, which is a very simple recipe, it's just 4 steps. Higher lows are sufficient until then. Until what? Until we print a lower low, which is what the bears did for the first time. Let's go back in time here. What do we have? We have a bullish engulfing daily candle right here with a golden cross. And then we have a number of things. A low, 2, 3, 4, 5, 6, 7, 8, 9 in a row. 9 higher lows in a row, or 8 in a row. That was the video yesterday. Well, now we have a lower low, and now we have an inside bar. So what this basically means is that we're pausing on this current flag before we decide what we're going to do next. So if we have a look to levels, it's really simple. That's now resistance. If we go below today's low tomorrow, which is at the L, 619.52, I'm going to say this tomorrow. So it's not going to be a secret if I turn bearish on the 1-day chart. If we print another lower low and close below it, if we print it, that's 3. If we close below it, that's 4. And then where are we likely going to go? Well, grab your chips, because we're probably going to get some dips. Maybe down to here, maybe down to our bull market area, maybe even, God forbid, back down to 570. Oh my goodness. So now we know what's happening into tomorrow. Is US still exceptional? We're going to find out. Because Trump is hiking tariffs on copper, maybe to 0, maybe to 50. We'll find out what happened. Copper pumped and then it dumped. We're basically right back to where we started. So lots of Wall Street is divided. Are we going to go higher? Because Goldman Sachs is the king of Wall Street. So they're going from 65 to 66. Sorry, they went from 61 to 66, and then from 65 to 6,900. Oh my goodness. David Kostin's pretty smart. All right, look at the size of his head. It's huge. So he's got a big brain, and Goldman Sachs is usually right. What's going to happen? Well, they think we're going to go up. That's a big Wall Street firm. This is how it could happen. This is my prediction for this year, going back to January 5th. And as we're doing this, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up or subscribing to the channel. Thank you very much ahead of time. My target, 690. That's 6,900 on SPX. Pause the video if you need to. I got stuck in here. I said we're not going to fight the trend, which is bullish until. And then we got this. Oh, crap. So that was kind of a trap. Yes, it was. I'll show you the note, which matters, and it's the only one that matters. If we go to here, if you go back in time, because there's actually a timestamp here, what I'm trying to show you is that it might appear like I'm flip-flopping, but I'm not. I said this on January 5th. I said, right? Until this happens, we just printed a lower low, by the way. I already warned you. We're at ingredient number 1. Closing below, well, that didn't happen. Sorry, that did happen. That happened into February. So if all we do are follow notes, right, we got the warning here, right? That's our first monthly close below. So that's technically only 2 out of 4. Well, the next month we printed it, which meant we went to 3 out of 4, but we did not close below. What was it? We went below, rallied back up back above the opening price or the low, and actually closed higher. That's what happened right here. Let's go back and look at it now because it's really simple. So that's a failed breakdown. We failed. Failed breakdowns are bad. Remember, we had all these fails over here. We had 3 failed breakouts, 1, 2, 3, 4, 5, and we had failed breakdowns. That's everywhere. I cleaned the chart up because none of that stuff matters until we close a candle, which is at the end of the month. The bearish case really just depends on this one number, 619.22. That is last month's high because we have formed failed breakouts before. Then one here, here, 3 of them into 2022. There's one right there too. That's a bearish engulfing. We have one right here, fail break right there, fail break. The fail break was a leading indicator to a potential drop, which did happen, but now we're higher. So depending at when we look at the candle, we're going to see different data or different data. So that's how we can go to 690. From here, all we have to do now, if we follow the notes, higher lows are sufficient. It is impossible for us to break the monthly lower low until we break it on at least the daily. That's why if we're going to go a little bit bearish, we have to progress from kind of bearish on the daily to kind of bearish on the weekly, the monthly, and then the quarterly, which means that we're currently in fully bully boomtown by all dips above 610 for the weekly notes as of this week. These notes expire at the end of the month. These ones here expire at the end of the week. So hopefully now you understand the notes a little bit better because I go through this every day. It's no surprise. All right, so how could Stifle be right? How could we see a 12% drop? It's a pro article. It doesn't matter. It's going to be a technical reaction to it. So all we're going to have to do is what I just mentioned. Below 619.23, meaning not an expansion signal or above the previous candle, that's a failed break. It's potentially a topping pattern. Happened a number of times during 2022, and it happened in 2025. It was my leading indicator. If you want to find out more, let's go to the channel. You can subscribe and come hang out with me at 8:30 a.m. tomorrow. I stream live every single day. I look forward to seeing you tomorrow. Thanks so much.